What's going on, guys, and welcome back to another video. So today we're going to carry on my 5-year plan on going from 0 to 1 million euro net worth in 5 years. And we started off this process with a dividend portfolio, which we discussed in prior videos, which I'll link in the description below. So today we have some big updates on this in terms of buying 23 more stocks and finally completing my 50 stock overall dividend portfolio on Trading212. So obviously we have money in these other 6 investment vehicles as well, but because we haven't mentioned them in prior videos yet, we're going to wait until then and we'll slowly start adding in this money. Because obviously if we only had 520 euro at this moment in time, there'd be no chance we get to a million in 5 years. So today we're going to go through my 50 stock dividend portfolio and give some updates on that. So with all that being said, let's dive straight on over to Trading212. So here we are on Trading212, where we currently have about 517 euro, of which 8.99 euro is free funds, and we have 508 euro invested. Now that will be in 50 stocks spread across all 11 sectors in the market. Now also there's no kind of magic number in terms of how many stocks is actually the magical number. Some people might think 50 is too much, some might think it's too little. But again, I have my reasonings behind why I wanted 50 and a fully diversified dividend portfolio, and we'll go through that in the next video as well down the line. But again, I just want to start very small here, as well as mentioned in prior videos, and why I only have 10 euro invested in all 50 of these stocks, just to get a fully solid foundation built here before I start building upon this in the coming years. Also, just 2 other points to note as well. Firstly, this is definitely not a get-rich-quick scheme. These dividend portfolios, these really take years to take effect in terms of compounding effects of dividends and capital gains. So this is going to be a long-term portfolio. It certainly won't be as exciting as my growth portfolio, which will be starting in the coming weeks as well. But definitely patience and consistency is key in long-term dividend success, which we'll kind of track over the next few months and even years. And second of all, the overall markets have been down over the last few weeks, which I'm sure you're already aware. Now, this is actually quite a good time to start investing in this portfolio, in my own personal opinion. Now, obviously, that's not financial advice, but that's just what I think myself. So, again, most of these positions which we look at today actually will be in the red. Now, because you only have 10 euro invested in each of these 50 stocks, it's going to be very easy to dollar cost average down. And when we actually buy more of the stock, my overall average price will dip as well, which again, long term, will make us even more money. So it's certainly been a busy few weeks in terms of getting this portfolio together. I didn't want to rush in at all. I only was buying about 5 to 10 stocks every week. And again, I really did doing a lot of research to all of these 50 stocks spread across all 11 sectors here on the left. Now, as well as mentioned, I wanted a target for each of these sectors, which you can see in column B, predominantly 4 or 5 stocks per sector, because I did want to have diversification, because different sectors react differently to different market conditions. And that's one of the main reasons why I wanted 50 stocks overall, is because there'll always be an opportunity to dollar cost average, because there'll always be some of the stocks in the red, which again will definitely reap its rewards long term by consistently dollar cost averaging in. Now, over the last week or so, I really upped this portfolio in terms of adding another 21 brand new stocks, which again, we now have our 50 overall stocks in Trading212, which we'll have a look at right now. So just for the purpose of today, we're going to go through each of these 11 sectors on Trading212 very briefly, just to show you what stocks I got in each of these sectors. And down the line, we can make a lot more detailed videos in terms of my average yield per sector and how these stocks actually will perform over time. Now, because we only invested in these stocks over the last week or so, it's going to take a long time before these actually start going into the green and for dollar cost averaging to take effect. Now, as mentioned in prior videos as well, I only wanted to invest 10 euro into each of these 50 stocks at the start, and then we're going to start looking at my growth portfolio over the coming weeks. And once we have both of those kind of started off, we'll start lumping in a lot of capital towards our start of 2022, so this portfolio and the growth portfolio will really start taking off over the next few months. So firstly, we'll have a look at communication services, where I only wanted 4 stocks overall. Now, straight off the bat, the first stock out of the 50 is the only one of the 50 stocks that currently do not pay a dividend, which is Walt Disney. Now, as you're probably aware, Walt Disney cut their dividend about 2 years back now, because obviously we all know the reasons behind that. But again, the reason I wanted Walt Disney in this portfolio is because there is talks of a dividend coming back. And definitely over time, especially because this is a long-term portfolio, Walt Disney will certainly get its dividend back within this portfolio. So that's the first stock here, and the other 3 are AT&T, Verizon and Omnicom Group. Now, communication services, if I'm being honest, it was one of the hardest kind of sectors to actually find decent stocks in. Now, again, that's one of the other reasons why I wanted 50 stocks overall, because I won't actually have a lot of capital invested in any one individual stock, which can have its ups and downs, I guess. But definitely, this was probably one of the hardest of the sectors to get 4 decent stocks in, and that's probably one of the main reasons as well why I wanted to add Walt Disney here, even though they're not paying a dividend at the moment, is because they're certainly one of the best communication services stocks out there. The second sector that we're invested in is consumer discretionary, where we have 5 stocks overall, which include some dividend aristocrats in the form of Target, Genuine Parts, etc. So I'm quite happy with the overall foundation here. And then we have the likes of McDonald's as well, Starbucks, and Snap-on also. So I'm quite happy here. Now, as stated earlier, we won't be going into a whole lot of detail here. Today, the overall purpose is really just to see and show you guys what stocks I actually got within each of these sectors. In consumer staples, we have well-known stocks here as well, and a few dividend aristocrats. The 5 stocks we have in consumer staples are Coca-Cola, PepsiCo, P&G, Walmart, and Unilever. Now, again, there's a lot of solid stocks here that it won't be too exciting in terms of growth over the next few years, but again, they're consistent dividend stocks, and the whole purpose of this overall portfolio is certainly over time consistency and slowly building capital up through capital gains and the compounding effect of dividends. Now, just on that note as well, I'm currently in the process of making a dividend portfolio tracker. As you can imagine, tracking 50 stocks might be quite time consuming, but I am kind of building out a portfolio or a spreadsheet at the moment, which I will share with you guys once it's complete. So that will kind of be interesting to see my overall dividends daily, weekly, monthly, and even yearly, how much I'll be getting each time I invest more capital into this overall portfolio. So I'm excited to see the compounding effect there over time. Now, next up, we have my energy sector, where we have 4 stocks overall. Now, initially, I did want to have kind of 2 of the old school stocks in this sector in terms of ExxonMobil and Chevron, which we have here, and I did want to have kind of 2 renewable energy stocks as well. However, after doing some research, the majority of the renewable energy are going to be in the growth sector because it's a relatively new sector within this market. So I might put some of them into my growth stock portfolio. Again, we'll discuss that in further videos. So overall, we kind of went with the 4 older school stocks here in the form of ExxonMobil, Chevron, BP, and Royal Dutch Shell. Now, also, one of the reasons why I kind of went to 4 old school stocks as well is because each of these also are kind of diversifying out and starting to look into renewable sources of energy as well. When it comes to financial stocks in dividend related, that is, it's quite easy to find a lot of stocks in this sector that are quite reliable over time. Now, again, I had some kind of difficulties getting stocks in a lot of sectors. However, my difficulty here was actually cutting it down. I could have easily put 10 to 15 solid financial stocks within this pie, but again, we're capping it at 5. Now, the 5 we have here are JP Morgan and Chase, Bank of America, Citigroup, and Goldman Sachs, and the 5th one then being one you guys recommended, and I looked into, which I was quite happy with in terms of dividend payout, is Bank of Montreal. So again, as stated, I could have easily put another 5 stocks in here, but that's the whole purpose of kind of having rules and setting out rules before you start a portfolio, because you don't want to be kind of over or underweighted within any sector within the market. We then have a sector that pays a fairly good dividend for blue chip stocks, and that is the healthcare sector. Now, I wanted 5 stocks allocated here as well, which you can see on screen. The likes of Johnson & Johnson, which is definitely a dividend aristocrat. We then have a few others as well, the likes of AbbVie, Pfizer, Cardinal Health, and Abbott Laboratories. Now, again, there was kind of back and forth between 2 or 3 of these stocks. Now, I was always going to have the top 3 in this portfolio, but the bottom 2 were kind of in a basket with another 5 or 6 different stocks, but overall those 2 prevailed. I'm quite happy with my overall 5 selections in this healthcare sector. Another rule or regulation that I want to have in this portfolio is to have roughly an average overall dividend yield of about 3%. I find that's quite realistic and quite attainable as well over time. So again, in videos to come, we will kind of go through my dividend yield average per sector and my overall yield as well, but we'll keep that for another video. Today's purpose is just to give you an introduction of what we have. And next up is my industrial pie, where I want 4 stocks overall. 3M, Caterpillar, and Waste Management are 3 that I have invested in my prior portfolio as well, so they were always going to be here also. Now, the 4th one here, to be honest, I didn't know a whole lot about until looking into this and doing some research, was Lockheed Martin. Again, it's quite an interesting company if you would like to look into that yourself as well. We won't waste time in today's video going through that, but again, I'm quite interested in this stock after doing some research. So that's kind of the 4 stocks here that make up the industrials. Now, we have about 4 pies left here, or sectors, in the form of materials, real estate, tech, and utilities. 2 sectors that, in all honesty, I probably won't be putting a whole lot of capital into is probably materials and utilities, but I do want to have representation here nonetheless. And probably the 3rd sector will be communication services, besides Walt Disney. The other 3 stocks there as well aren't doing great at the moment, but again, they're the best of a bad bunch. But again, that's why I wanted to have 50 stocks overall to have a really good diversification across all 11 sectors. but I do want to have representation nonetheless. And materials, I have 4 stocks here in the form of Air Products and Chemicals, Ecolab, International Paper, and Packaging of America. Now, I'd be lying to you if I knew all these stocks inside out. That's totally unrealistic. But again, that's the whole purpose of having 50 stocks, because again, you just really want an overall array of 50 blue chip stocks, and really over time, the compounding effect of dividends will certainly pay off. Now, probably the most interesting sector I have is technology. However, in terms of dividend stocks and technology, it's not too exciting in my own opinion. It will be very exciting in my growth portfolio, which we'll discuss in the coming weeks. But in terms of this portfolio, real estate is certainly my most exciting one here. I'm really interested in these realty income stocks or realty stocks. And the 5 here are, firstly, Realty Income. We have Stag, Welltower, Essex Property Trust, and National Retail Properties. Now, some of these pay a monthly dividend, such as Realty Income, and most of the others pay a quarterly dividend. But again, this is certainly a sector I'm really interested in. And at the beginning of this video as well, one of the 7 investment vehicles will be in real estate. Now, again, that would be upfront bricks and mortar style real estate there. But again, being able to own snippets of these overall real estate companies is very interesting in my opinion. My second last sector here is technology, where we have 5 holdings. Now again, you could say, hang on, why isn't the likes of Apple here? Although they do pay a dividend, I will be putting them into my growth portfolio, so there's no point having them in both portfolios here. So again, we have Microsoft, IBM, Intel, Cisco Systems, and Accenture here. So I'm quite happy with the diversification across these 5 sectors. Now again, in technology, the overall dividends aren't great in comparison to some other sectors, but that's mainly because they are growth orientated and they don't really want to pay a dividend. They want to reinvest their capital because, as you're fully aware, technology is ever changing, so they need to invest most of their money. So these 5 stocks here I'm quite happy with in terms of this sector. Now, the final sector is utilities, and stated earlier, I don't have a whole lot of interest within this sector, and I don't think many people actually do. But again, this will be interesting when I actually do make my dividend portfolio tracker in terms of diversification. I wouldn't be surprised at all if utilities was my lowest of the 11 investments, so in terms of capital invested. But again, as mentioned earlier, I do want a representation of all sectors, and we have 4 here in the form of Duke Energy, Consolidated Edison, NextEra Energy, and American Waterworks. Now, there's a few dividend aristocrats mixed in there as well, so I'm quite happy with the 4 utility stocks here. But again, if I was asked to pick a 5th and 6th stock, I'd find it very difficult within this sector. So that's pretty much the end of today's video. I just want to give you a brief overview of how my dividend portfolio has laid out in terms of structure, and we went through each of my 11 sectors, which combine up to 50 stocks overall. Now again, we only have about 520 euro invested here at the moment, and that's there was a reason behind that. I do want to just have an average overall kind of structure here before we start really pumping up the capital. So I will be doing that over the next few months as well, so I'll definitely keep you updated anytime I invest further here. But over the next few weeks, we probably will start focusing on my growth stock portfolio here as well. Again, I'm currently in the process of looking for a new brokerage because I do want to keep my dividend portfolio and the growth portfolio separate. So if you have any recommendations in terms of brokers, now again, I will need to have fractional shares there because we will be starting off with a small amount of capital. So if you have any recommendations, please comment below. And once we have my growth and dividend portfolio started, we'll then kind of give some updates in terms of real estate. Now, this is the one of the 7 here that will really start bumping up this overall net worth. So I'm really looking forward to kicking that off as well. And because at the moment we can see the tracker here, we're currently 0.052% of the way there. Now, I know we only started a month ago, but certainly we will start upping things in the new year. And even over the next few weeks, I do want to start having a solid foundation across all 7 of these, which will definitely give us good standards going into 2022 and onwards. So I'm really looking forward to looking back over these videos over the coming years to see if we actually hit this 1 million euro net worth within the next 5 years. So thanks very much if you made it this far. I hope you enjoy the rest of your Thursday, and I will see you all in the next video.